station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup filling in for Tom O'Brien. I believe he'll be back tomorrow. I hope you all are having a good day. Let's take a look at what we got going on right now. We scroll up to the top here. We have off about 0.69%. The E-mini up about, well, we're sideways right now in the Russell. The NQ's off pretty deeply, 1.43%. Same with the composite. And the Dow futures just up slightly, 0.26%. Gold contract up about a full percent point right now at 2,449. Silver at 28.45, up about 2.11%. And then copper right there at 409. Crude oil continues to go down. I want to bring up a little article, talk about why that might be happening, especially at a time when you're having increasing tensions in the Middle East. I think the IDF just launched a missile into Beirut to hit an Hezbollah target, which is usually kind of a bullish thing for oil, but it's not seeming to affect the market too deeply. Before I go any further, you know, we have a great lineup today. Of course, we have Basil Chapman in the second segment, and then Tim Ord from there on out. One of the things I want to bring to your guys' attention, we extended this out. This Tiger Dollar sale we have, again, huge bonuses, 20, 30, even 40% bonuses. That's going to end August 1st. Okay, so get in there, and we have Basil coming on. Talk a little bit about his opening call newsletter. Of course, he just had his webinar, which I am getting up. I'm looking at for the people who've been emailing me, I am looking at it rendering right now. We just had some tech issues. The computer that had the problem has been reprimanded, and we will not experience that again. Let's take a look. Of course, you have Microsoft after the bells. Microsoft earnings after the bell. Off about 1.49%. Of course, you had issues going on last week with CrowdStrike, although that wasn't necessarily Microsoft's fault. But today, they are having outages with Azure, Team, and Microsoft 365. I think Teams was just recently added to that. And from what I'm seeing, there's not too much commentary on it right now. But essentially, they had a usage spike, and this weighed down the servers, and supposedly that's what's resulting in these outages. You know, stick around and read when this comes out what the main cause was, because it could be kind of significant if for some reason they had an unforeseen, usage spike and they weren't able to balance that out. Kind of crazy. But as it stands now, you're down 1.52%. Of course, other big news after the bell today is going to be AMD. They're coming out now. AMD's been getting killed since around March. You had a high of 227.30, and while everything else in the chip sector has been steadily going up, you've had really an on average just to the downside, right? You had this small spike around in July, but we're reaching very low, even to yearly lows on this, and essentially they're looking for continued growth, at least in their data centers and in purchasing of their chips. Remains to be seen how that works out. I'm looking at some of these other, obviously you can see that the NQ is down right now, right? I'm taking a look at NVIDIA as well. That's off 6% right now. Now, the cycle happens that right before earnings, you get a relatively, sizable sell-off, but, this is pretty strong, right? This is 6% to the downside today, trading at 104.90. It looks like it really wants to get back to that gap up right around that $95 mark. And this is not, insignificant volume to the downside. So it looks like we might be testing that breakout level. In NVIDIA, of course, these companies are around to stay, but I wonder if some of these larger analysts are expecting maybe, some bad projections for at least the next month, or excuse me, the next quarter. It remains to be seen what happens with that. Let's see. We have SoFi as well. SoFi, that horrible SPAC that came out a few years ago, trading up about 0.48%, 736. They had a profitable quarter. Their EPS was 0.01. That beat the estimates of just 0. So there you go. Raised 2024 guidance. Let's see here. They reported net revenue of $599 million and net income of $17 million for Q2 2024, marking the third consecutive quarter of GAAP profitability. Recorded adjusted, let's see here. The net revenue is driven by 46% combined growth in financial services and tech platform segments. Yeah. I mean, I think that this stock gets a lot of attention because a lot of people, let's see. I don't want that month. I guess I can't go any further. Bought it really around here, probably even further back than it, right? Yeah, this 28, 26. This is when it kind of hit IPO. This is a SPAC, of course. I think Chapman pushed this, and a lot of people just got into it, and they're still holding it because they thought it was going to be a major winner, and it has taken a long time for them, to be super profitable. They've done a lot of cool acquisitions like Galileo in the past, but it just hasn't been coming to fruition, and that's giving you a price of $736 on it and a $7 billion market cap as well. I don't know. That's a weird one. Again, these things stay like meme stocks because people just don't get out of them in time before they're dumped, and then we continue to go on. It's like crazy to me. We'll talk a little bit about AI. One of the big things with Microsoft is that people are going to be, AMD to some extent, but really Microsoft. The next few quarters are going to have analysts looking at profitability arising from the major investments in AI, which is actually, that's why we're adding, AI to all these kind of companies. And it's going to be hard to say when these actually become profitable. You have JP Morgan. Now, this is kind of interesting. I'm not sure really how much they've invested in it because they're just using ChatGPT, but these ideas of how these larger companies can actually start generating a profit with it. Of course, you have Meta using certain things for, I believe, like video creation. Let me see here. Yeah, AI Studio in the US for creators to build AI chatbots. That's interesting in and of itself. I think that's using Llama 2, which was reviewed this weekend, and everyone said it beat ChatGPT 4.0, but I think the jury's still kind of out on that. We have JP Morgan coming in. They're rolling out a generative artificial intelligence product, telling employees that it's its own version of OpenAI's ChatGPT that can do the work of a research analyst. Pretty crazy. You're still gonna have someone there to look at it, but this is where the future is, right? They can make a lot of money rolling this out. Folks, stay right there. We're gonna be joined by Basil Chapman in the next segment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Tigers, it's back. The annual July Tiger Dollar Sale. If you've been wanting to try one of our products, from our stellar newsletters to educative webinars, now is the time. From now until August 1st, we're offering a 20, 30, even a 40% bonus on Tiger Dollar purchases. After being applied to your account, your Tiger Dollars will be used for all purchases. They can be easily transferred, and they never expire. If you want to receive a 20, 30, or even a 40% bonus from purchasing Tiger Dollars, now is your chance. This is a perfect opportunity to try out a newsletter or save big on your current subscription. This deal is only available until August 1st. So lock in your bonuses fast. Go to TFNN.com today to lock in your bonus. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. I want you to take a look over at the screen here. We are taking a look at the opening call newsletter by Basil Chapman. Now, Basil just had a subscriber webinar last Tuesday. It was fantastic. In fact, let me check the upload time. We have 98.5% uploaded on there. So get a subscription today. Get some Tiger Dollars. You get a really nice savings from that. And then you can watch that webinar that he had last Tuesday. Really excited to hear what you have to say today. Basil, how are you doing?
Hi, Jacob. How are you doing? I'm fine, thank you.
I'm doing well. What are we looking at?
Well, we're looking at the Dow chart. On the left here is the Dow daily. On the right, in the middle is the weekly chart, and on the right is the monthly chart. We're about to wrap up the month of July, and you can see on the right here, this is the monthly candle so far for July. The day is young, the month is young, because we still have Microsoft coming out after the bell. That's going to be important. So here we go. The monthly chart so far is extremely bullish, and we've gone very quickly. In the Chapman wave, we're always looking for at least 4 higher peaks, and I alphabetize them A, B, C, D, but they can go to E, F, and G. But most importantly, I like to look at the technicals to see if there's a confirmation that the buy mode is still in place. Well, I need the 9-period moving average way above the 14, and you can see here in the monthly chart, the price is way above the 9, and this is the green line, and the green line is way above the 14. That's a very good sign. The MACD, the moving average convergence divergence, is strong. It's not overly it isn't overbought. On the left, it got overbought at the 36,952 high back in January of 22 before it plunged down to the 28,660 level. We did get long a position. We've been long from 2020 and March, and then October of 2022 we got long, and we've been long, and we have trading positions within that. So that's the Dow. Most importantly, the weekly chart has got this double U formation, like a W, and the MACD has crossed positive after being negative, and the stochastic is not at 80%, it's at 77%, so it's a little underperforming, but the price has held very well. The weekly chart has made this cup formation, and you can see here as well, the 9-period is over the 14. That's very good, and the MACD has just barely crossed positive, and the relative strength is good, not great. So the 914 is really the benchmarker that tells me that there's still internal strength, and we are long, so we're looking for higher prices. Now, what's really interesting, I'm just going to get a drink of water if you don't mind.
Absolutely.
All right. Does that smooth things out a little bit? Okay. So what we've got is there's a huge divergence. I've been talking about this for weeks and weeks. I've said there's a really good chance that the Dow 30, just at this moment, this particular phase, it has U.S. companies represented in the Dow. It's not in the Dow Industrials anymore, though they call it that. It's really the Dow 30. And as such, it's got important components within that. It's got insurance, got everything. So what's really important about this is that the price is holding quite well. It needs to go a little higher for me to feel comfortable, but so far this is good action on the daily chart. Now, what I've been talking about is that there's a divergence between the semiconductors, which have been negative for some time, made an all-time high of 283.07, and it's made this round trip with this cup formation, and then it failed, and now it's broken through the left side low of 234 way back in end of May, beginning of June, and it's now at this little trough right here that's on the 17th of May of this year, and that's at 228.62, and we're at 230.50 right now. We have gone down to the 228.33 level. That's important. So it tells me that a pretty key component of the general market, which is the semiconductors, which I always say kind of guides the market up and guides the market down, and generally the market follows. That's important because together with this, we've got the S&P rather weak. You can see right here. It's just holding support in the weekly chart. That's going to be important to hold. And the QQQ, which has the semiconductors in it, whoops, 1, 2, 3, I did it 4, is dropping quite sharply, and the weekly chart now looks quite poor. So it says to me there's very selective strength. Where's the strength? And I keep talking about it's like the scales of justice. On the one side, you've got this, and the other side, you've got that. Sometimes one is bigger than the other. They try to balance out. So what we've got is the Dow is showing strength. The S&P is showing some weakness. The QQQ is showing some strength, showing weakness. But we've got the IWM that's been taking its place, and I've spoken about this actually for weeks now, saying that I think that there's going to be a rotation in this market, and that's the first time we've seen that, even though the semis are coming down, semiconductors, which are really important, we've got money going into another area, and that area is the small caps. And if you look at the IWC, which is the Russell 1000, the IWB, the Russell 1000, that went to all-time highs on the 16th of July and is pulling back. So now you're seeing that the former winners are taking a breather, and the stocks that were and the indices that were lagging are starting to rally some. So that's important to me. Within that context, we've got Microsoft from the 338 level for quite some time, since October the 31st. We've had it in trading positions, but I don't want to go through this now. I discussed it, I think with Tom it was last week. I'll do some of it more tomorrow because we'll have the earnings after the bell.
Right. But
it's had a fabulous move. It's a pattern that I call the stork leg formation. Just there's a long leg, then there's an oval body, then there's a neck, then there's the beak. We're in the beak phase. We had a big bounce off the low that was made just recently. Now it's gone back to this sharp move down. And Microsoft is in the Dow, it's in the S&P, it's in the QQQ, it's in the XLK, the S&P Select Spider, and the AIQ. So it's really important, and it's had a fantastic move. It's in this digestive phase. So it's going to mean that if whatever the news is, tomorrow is really the day. Whatever happens overnight, it's really what happens tomorrow between, say, 10 and 11 o'clock in the morning. I'll discuss that during my show. But I think it is due for a rest. It'll be fabulous if it could bounce, but it does deserve a rest after being such a fantastic winner. So this is a very select market right now. You can even see that in the, for instance, we have a silver stock, which should technically, with silver tanking like it has, this has held very well so far. Can it continue? Well, that's the question. There's a core mining CDE. It's held very well. And that's really what's interesting about this market. The stocks that have held well seem to have are holding, even though the other components within the sector pull back. So it's individual stock selection that's really important. And it's the way we're trading, and we've built up a cash position. We are looking forward. That's why I had the webinar the other day. We've built up a list of stocks that we would really like to be buying, waiting for a pullback, and they are ranging from single digits to triple digits. It's just a real mix of different areas. For instance, SWK, Black & Decker, it was doing nothing. It was Stanley Black & Decker. It went from 220 down to the 70s, and it was just messing around. Suddenly today, it's up 9%. So I think the laggards are really the ones that are going to show some strength.
Yeah, and you go over all that. I mean, talking about sector rotation during your webinar on Tuesday, it was fantastic. Yes. So, folks, if you want to check that out, all you have to do is subscribe to the Opening Call newsletter. If you don't like it, if it's your first time subscribing, you get a 30-day money-back guarantee, no problem at all. Basil, thank you so much. We're looking forward to hearing from you at 10 a.m. tomorrow morning.
Thank you, Jacob.
Take care, folks. Stay right there.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We were just joined by Basil Chapman, He's going to be on tomorrow at 10 a.m. Eastern Time. I really recommend checking him out. Again, his webinar was phenomenal. I always like staying after a little while to admin that and always learn a lot. Before we move on to the next guest, I just had this news pop up. Everything with Roaring Kitty and GameStop, a lot of people were trying to say that he was manipulating the market. You have Massachusetts looking to him. And notably, you had Citron, which is a massive short seller, who is actually shorting GameStop, was kind of a victim of that short squeeze that Roaring Kitty profited off of. They said that he was essentially manipulating the market by putting out his positions. Well, it turns out that the SEC is actually criminally charging Andrew Left of Citroën now for actual market manipulation, which is insane. Quote, engaging in a $20 million multi-year scheme to defraud followers by publishing false and misleading statements regarding his supposed stock trading recommendations. How about that? Now, let's move on. Every Tuesday and Thursday on the Tom O'Brien Show, we are joined by Tim Ord of the Ord Oracle. That is ord-oracle.com. We are looking forward to his analysis. Tim, how are you doing?
Good. Thanks for having me on again.
Absolutely.
So let's take a look at the S&Ps. The market's kind of corrected here since middle of July or whatever. Market's pulled back, but I want to look at the bigger picture. This chart number one is the bottom chart is the daily SPY, and the top chart is RSI 14 on the daily period. And all I want to point out on this, I marked times when the RSI was above 80 on a daily, which you can go back as far as you want, but every time it got above 80 and actually below 90, somewhere between 80 and 90, when the RSI got plus 80 but below 90, it was never the final high. What RSI kind of measures momentum of the market. When it gets 80, as usually the market does pause, but it's never the last high. So this chart goes back to mid-2016. And I got two squares on the SPY chart. And one of those squares is probably going to be pretty identical what's going on in the market right now. The market's flipped sideways since about mid-July. Looks like to me we haven't found a low yet. We'll discuss that as time goes forward. But this sideways consolidation, in my opinion, could last another month or two, possibly even October. But August here starts Wednesday starts Thursday, and probably August is going to be a down month. I think September could be an up month, but October is probably going to be a down month. So we're going to see a lot of chop, and this choppiness may look like the square in 2020 or that little square in 2017. I don't know which one it's going to be. Depends how deep we go here on this correction. But again, the bigger trend's up. We'll see new highs before the year end, but the new highs will probably come after October. But we do have a timeout and an uptrend right now, but the bigger trend remains bullish. So let's flip to kind of chart two.
Absolutely.
All right, chart two, the top window is this is a weekly chart. But the top window is the weekly National Association of Active Investment Managers Exposure Index. And what this chart does is exposes what the National Association of Active Investors are doing. When it gets up above 100%, in other words, 100% of their funds are along the market. The funds on July 1st got to 103.63%. In other words, they're on margin almost 4%. So the 100% plus 4% margin. And so every time that has happened, I got some red lines in there and actually kind of shaded pink areas times when that happened. Well, again, this happened on July 1st. That was kind of a warning that we're probably going to stall the rally, which it did. And so what do we expect now next? Well, I got kind of a pink circles on that chart, which is the top window. And those, what I'm trying to say is once you get above 100% long in the market, then the market pulls back. What's the minimum you would expect previous times going back to, this chart goes back to 2021, about mid-2021, but it at least gets back to 60% long for them. So what I'm saying is the current long exposure for this group right now is approximately about 75%. They need to get down to 60% or below before a bottom starts to form. So what this chart says, we haven't had enough damage in the market. I gotta put it that way. Sentiment's not right for a low here yet because the active investment managers are still too bullish. They're up around 75%. They need to get down 60% or below to get the sentiment right for the next rally to begin. How long will that take? I don't know. But it could take, several more weeks, I'll put it that way. So this choppiness, at least so far, is probably going to continue again for the next several weeks, probably the next even couple 3 months. So it's kind of the doldrums of the summer are kind of on us.
The dog days.
Way. So, but that's one indicator. So that's the sentiment. This is kind of a sentiment indicator. It's not right for a bottom. And the next chart number 3, is kind of a panic chart. This is sort of a sentiment, I guess you might say also. But I do a lot of stuff with the trend, and I do a lot of stuff with the ticks. But trend seems to work better. I even used to have a combination tick trend ratio, but stock charts don't really publish the ticks anymore, so I don't use that chart. But it was helpful. But anyhow, the top window is a 10-day trend of it's a 10-day trend, and normally readings above 1.2 show panic in the market. So a trend reading of 1 is neutral in the market. Trend reading like down 0.9 is usually kind of bearish. People are getting too exuberant to the upside, and it gets above 1.2. They're kind of starting to show fear in the market, and that fear is always a good sign. So you want to go into a market. If the market's going down and there's no fear, the markets are going to keep down until you do get fear.
Right.
And this chart kind of defines how that develops.
Yeah, perfect.
Yeah,
Tim,
hear the music.
Yeah, stay right there, folks. We'll be right back with Tim Ord of the Ord Oracle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We have Tim Ord on the line. You know, you hear a lot when Tim Ord says this doesn't look like a bottom, this doesn't look like a top. If you ever want to learn more about what he's saying when he says that, because it's really good stuff, I'd recommend going over to TFNN.com. You can go down to the services page right here. Scroll down a little bit, and we have two really stellar webinars from Tim Ord, The Secret Science of Market Tops, and then 6 ratios every trader should know. And that, again, is hosted by Tim Ord. Really recommend checking that out. Tim, before we went to break, we were looking at the Stock Exchange ARMS Index.
Yeah. Okay, we're back on chart 3. Anyhow, the top window basically is the 10-day average of the trend. And again, the trend of 1.2 or higher is usually bullish. That shows more volume going into the down stocks, and that's showing that shows fear. And the more fear you have, the more closer to a bottom you get. So, but a 10-day average, in other words, that's 2 weeks of trading of average of 1.2 or higher, that's quite a bit of panic. And you actually have panic going in an uptrend, but most time it forms at significant lows. But what I want to point out, the 10-day trend right now is 0.99, which is I got circled to the left, far left there. Mm-hmm. And that's not even that's neutral market. So, you know, this is no sign of a panic at all so far in the market. So it'll get panic, and traders will feel it, and they'll show up in this trend reading. But right now, you know, there's no sign of a worthwhile bottom for me here. Matter of fact, even on the two-day trend, which is the bottom window, it also comes in right at neutral, 1.101. So even on a 2-day, there's no trend, or there's no panic. So no sign of a worthwhile bottom for me here. Not saying the market's going to be up tomorrow or down tomorrow, but it's not giving any major sign. I guess if you're a trader, you know, you might take a shot. But anyhow, let's look at the real short-term picture. Let's go to chart 4. So the bigger trend, we hit a high in mid-July. That high is still enforced to the downside. So in general, we expect the market to move forward or move down to some point where we're going to have panic on the 10-day trend. Is going to get up around 1.2. Wherever that area is, that's when I'm going to start looking for a bottom. I don't know what time that's going to be, but the time will be when that trend gets above 1.2 on a 10-day average. But on a short-term basis here, this is just a daily SPY, and there's gaps all over the place. You know, we gapped down from the July high. I got a little gap there on the chart. Then we had another gap last week, and we had an actually up gap on Friday, and now we're coming back down and testing that gap today. So depends how a gap is tested, if that gap's going to be support. And I got some dotted blue lines on that chart. Shows you last Friday's gap up. I got a little gap sign printed in there. And now we're going into that gap today. So this gap will be support if it's 10% lighter volume or greater. and I don't have the volume on last Friday, but we got, about 10 minutes to go in the market, and it looks like that gap's going to be tested on lighter volume. So probably, but the day's not over yet. A lot of times the volume really comes in right on the close, and the SPY trades till about does trade it until about a quarter after 4 Eastern time. So we got about 15 plus 10. You have about 25 more minutes of trading on the SPY. So we may reach the volume we had last Friday. If it comes in equal, then that gap will not hold support, and it'll move lower. But if the gap comes in, say, 100 million shares were traded last Friday, would come in 90 million, the chances are that gap's going to hold, and we're going to try to bounce. We're going to bounce to. Well, there's a gap down last Wednesday, and we may test that upper gap. So we may rally back there. So it's just kind of a mush market. I think we'll probably find support at last Friday's gap. It's a little bit too soon to say, but just looking at the volume, I don't think we'll reach last Friday's volume. And the market may take a run for the gap of last Wednesday. And last Wednesday's, if you look at that volume, it was pretty high. So I doubt we'll get through that last Wednesday's down gap, and that gap will probably be resistance, and we'll go back down again. So it's kind of a gobbledygook market. Mm-hmm. And this is probably going to last for several more weeks of just back and forth. So if you know the short-term rules of gaps, you'll probably do fine. If you don't, you get chewed up in this market. But it's kind of a gobbledygook market. But anyhow, it looks like today we'll probably find support at gap. But the only rally worthwhile is probably back up to 550, which will probably be resistance, and we'll test that gap probably on 10% of lighter volume and send the market back down again. So the next decline, maybe first part of August or mid-August, we may start lining up for a buy signal if we go back down to the bottom of that blue area, which is maybe 530 area on the SPYs. So too soon to say yet, but we're staying on the sidelines personally. So it's just too much noise here in the market. We got time to cover the gold market?
Absolutely we do, yeah. We have about 2.5 minutes till the break, and then obviously if we don't have enough time right now in this segment, please stay for the last one, because I know a lot of the viewers here love hearing your input on the metals. I'm pulling up chart 5 right now. That is the GDX ADP.
All right, yeah. This chart, this is a monthly chart, and it's kind of a repeat, but the only thing I want to show you, this chart, actually the weekly, the bottom window is a cumulative up-down volume. Next higher window is a cumulative advanced decline. Top window is GDX. This is a monthly chart. The monthly charts gave a long-term buy signal. This is a actually previous signals of this type lasted a year and a half, if not longer. So we got triggered on May 31st of this year. So we got a year and a half to go minimum for the monthly charts to run its course, and it may actually go longer. The weekly charts, same type of chart, but on a weekly time frame, gave a buy signal on March 18th, and that the weeklies are on a buy, the monthlies are on a buy. But if you notice the far right window there, both these two bottom indicators are gaining ground. They're making higher highs, and actually compared to what it was a month ago. So internally, the market is actually getting stronger. So this probably trend on the monthly charts of both these indicators, the up-down volume and advanced decline indicators, probably over the next 1.5 years are probably in general be rising every month. Similar to what happened back in 2019 and similar to what happened back in 2016, which is the light green area. So I guess if you get long here, just, if you're looking at the longer term, you can actually stay long. We can flip to, we're going to run out of time here.
No, that's fine. We just go into the next segment for sure. And there's been a lot of kind of sideways movement, at least with gold. I mean, today you're up 1.12%, which is pretty nice. But it'd be nice to see us kind of take off a little bit. But I hear what you're saying, just kind of hanging in there if you're already in. Well, Tim, stay right there. We're going to go to a short commercial break and then have a nice little segment. We can wrap up the last chart. All right, folks, stay right there. We'll be right back with Tim Ward.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup, filling in for Tom O'Brien. We are joined by Tim Ord of the Ord Oracle. We have a short segment here, Tim, looking at that HUI to gold, the bugs index.
Right, that's the middle chart. This is the weekly chart, and I have a blue trend line coming from the 2008 high all the way down to the current time frame. And I got a little circled in red there. We did break above that trend line. That has long-term implications because that trend line's, 20 years, whatever. It's a long trend line. The longer the trend line, the more significant it has. So this is a significant event for gold stocks. So we'll probably have something similar going on, what I think is probably like the 2000 low. Another indicator that really helped at intermediate term tops is I took the weekly RSI of that ratio, and I got red arrows on the top one of the HUI, weekly HUI, and every time the RSI got above 70, which is all those RSI of the weekly HEU gold ratio, you had some sort of a top of at least multi-week. And so I'm kind of watching this indicator. It won't be a top of any long term, but it could stall the market for several weeks, I'll put it that way, even a couple of months. but the RSI right now is 60 and needs to get above 70. So we may have that in September. So I think September could see a high, especially if the RSI of the weekly HUI ratio gets above 70. That may stall the market possibly into, maybe February of next year or something. Won't be a final high, but it'll be a timeout in an uptrend is how I put it. So there's long-term really bullish, short-term still bullish because the RSI hasn't reached 70 yet on this weekly HUI ratio. So I say enjoy the ride. I think this rally, you got at least a year and a half to go, maybe longer. So,
fantastic. Tim.
Have fun.
Yeah. Great outlook on that. Tim, thank you so much for joining us. We're going to see you Thursday. So looking forward to seeing what develops. Thank you for joining us, Tim.
Great. Thank you.
Folks, thanks so much for listening in today. If you are listening on YouTube, make sure to give us a like and subscribe if you're in the den. Thanks for being here. I hope you all have a great rest of your day.